There are 4 stages that all investors and traders progress through to become consistently profitable and attain meaning in life. Zone 1 is the panic zone, and it's really important to talk about this, especially as we've been observing a lot of negative and red price action. Zone 1 and Zone 2, the panic zone and the blame zone, are all about people's addiction to certainty. They want perfect timing, but they're incredibly impatient. They make one-way decisions, aka it's going up and it's never coming down. They do the cardinal sin of investing and trading, which is to buy on green and to sell on red. They typically go all in or all out. This is a problem because it doesn't give you any dry powder. They're frequently, absolutely and utterly addicted to the news. That would be good if the news gave you any signal, but unfortunately the news is fear-based. It's designed to make you sell. And who pays for the news? You got it, our beloved friends, the institutions. As an investor or a trader, if you're caught in either Zone 1 or Zone 2, they're really difficult zones to get through emotionally. But there's something that you must understand. If you're driven by your emotion, you're already losing money. This is a really harsh lesson to learn, but we've all had to learn it, those who have stayed in the markets. For example, the reason that people panic is that they just say, I don't know what I'm doing. And the reason people blame is that they say, well, you told me this was the way to go and it didn't work out. Therefore, it's your fault. Investing and trading is a game of skill. We know the price is always moving in a wave. It's always going up and down, or it's always going down then up. And this is something that just catches so many people off guard. They think price just moves like this or it just moves like this. That is not the case, and it never was. The key to understanding this is Zone 1, the panic zone, and Zone 2, the blame zone, are low knowledge zones. The problem with low knowledge is that people want absolute certainty. After all, they're terrified. Why are they terrified? It's like they're trying to shoot the bullseye on a target, but they're blindfolded, pointed in the wrong direction. The target is behind them. It's kind of like this little graphic here. Fire, ready, aim. Low knowledge will always give you low results. Also, a lot of scammers take advantage of people inside Zone 1 and Zone 2. They say you can get 100% return and 0% loss. We've figured out some incredible system. No such system exists. Everything is based not on certainty, but on probability. Inside Zone 1 and Zone 2, people are like light switches. They're either in the market or they've run like hell out of the market. Please do not run out of the market when the markets go red. When the markets go red, that's the time to get into the market because you're bound to get a retracement. Also, when you're dollar cost averaging in an uptrend, that's the perfect time. I always say everybody wants to buy at the bottom, but nobody is there when it actually occurs. Instead, through learning, and learning has one focus, to increase your knowledge, but it does more than that. By increasing your knowledge, it increases your emotional awareness. You will not be subjected to panic and especially not blame. But Ken, why not blame? It's so cathartic. It's fantastic. When I blame someone, it's their fault. Actually, when we blame, it's because we're angry, we're hurt, we've got an unexpected negative outcome. And it's something that we don't want. And so we say, well, we never wanted this. It must be because of an uncontrollable external cause. And I'm not responsible for it. I didn't do it. So I know what I'll do. I'll just blame everybody else. But I won't learn. I won't have insight. I won't gain awareness. I won't gain understanding. Because I just can't be kind to myself. I lost all that money, so I can't forgive myself. Please don't think this way. The markets are always going up and down in an uptrend, and down and then up in a downtrend. So long as you time the market correctly, you can make money. It doesn't matter what the market is doing. It matters what's going on inside your mind. I call this the doom cycle because it literally is. When you blame, you disempower yourself. You make somebody else greater than yourself. You don't want that because you're compounding your losses. Now you've got a couple of problems. Not only have you made a loss, somebody else is somehow responsible for you buying or selling. This only occurs inside Zone 2 of KS Zone analysis because when we get more intelligent, we have no cause to blame other people. We don't blame ourselves either because we know we either win or learn and never blame. Why don't we blame? Because we don't want to go into the doom cycle and disempower ourselves. If you're governed by your emotional state, you are trapped inside either Zone 1 or Zone 2, and you know what that means. You're going to be losing money to the institutions. If you want and crave and absolutely require certainty, you've got the wrong outlook and attitude on the markets. Ken, how can you say these things? What do you know about financial markets? I've been inside financial markets for nearly 4 decades, also coming from a background of financial analysis at university, as well as lecturing in first and second year statistics. I love the markets, but the markets don't often love us back. Therefore, we need to learn how the markets actually work. One of the best things that you can take away from this is price is always moving in a wave. It doesn't just go straight up. It doesn't go straight down. It's always moving in a wave. This wave-like function when it comes to price just throws people out all the time. They get the death of 1,000 cuts. You must understand that institutions bid the price up. They're the only ones with sufficient buying power to move the markets. When it's up sufficiently, they sell down, knowing that you probably bought around the top or pretty close to it. And then when it comes down, you're selling at a loss. You don't want to do these things. You want to just throw emotion out the window. It's very important. Rule 212 is a particularly good one at the moment. Markets demand. Notice the word demand. That's a pretty interesting word. That's a pretty strong word, isn't it? The tuition fee of losses. To understand what that means, we must understand how markets work. When price is going up, people are really keen, but when it comes down, they all scatter. Look, they've left the dance floor. They're no longer there. Now, why are they doing this? Because everybody's happy when the investment goes up, but when it goes down, everybody flees. Except who is pushing price up if there's no one there? Just look at this. Let me just pause this. Everybody just ran away. But look at the price. It's coming up. How is this possible? This guy is even going up the wall. What is happening here? It's obviously not these people that are buying. Who is buying? Of course, it's the institutions. The institutions say, do not ever buy a falling knife. Why? Because they are. The one thing that you really have to overcome when price goes red, do not leave the dance floor. Do not exit. All the fun is just about to occur. You need to manage your positions. You need to manage your mental state. And of course, you need to manage your risk. But all of this is doable so long as you're not going up the wall and out the door. I can always tell who will be successful inside financial markets. They stay when the going gets tough. So many people in our global family have been through the bear market, and we've been through the bear market together. A lot of new people are entering the market. They're not used to anything coming down. They think it must go up forever. This is not the case. When prices come down, that's the perfect opportunity to dollar cost average in and actually stock up on all the bargains that are presenting themselves. Just about everybody can relate to the Christmas sales where everything gets really, really cheap. Ooh, look at this, save 85%. Let's pick up 2 of them. But the concept is, during these sales, people actually just attack each other. They're just throwing themselves, trying to buy something. But when it comes to the markets, what are people doing? Inside financial markets, when there's a sale on, guess what people are doing? You got it. They're headed out the door. They're running, and they're running like hell. Please, 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 if you do this You must stop, because if you can't overcome this fundamental thing, you're just not going to make it. The markets, the financial markets, are there to teach you courage. They're there to teach you fearlessness. A lot of fear exists in the world, but when we're inside financial markets, we can become fearless. You'll see a lot of memes floating around when people want to get into the market. They all line up as the price goes green. But as soon as the price goes red, what do? Exactly like that cartoon. They run away. Please don't be one of those people. What you will find when you understand how markets work, you're not going to run away when the price is coming down. You're going to run into the market because you know it comes back up. And boy, oh boy, does it come back up. When no one's there, you can pick up the best bargains. And when everybody clears out, you can refill your bags time and time again. Yesterday, I posted on X this little quote: "It's impossible to make a profit going long at spot on a red day like this." I was looking at BOEM, and it was a pretty interesting thing. I bought $1,000 worth, and in about an hour, I sold it for about 14.9% profit. I'll just give you an idea of what BOEM was actually doing at that time. You can see that it was down literally 29%. Where I bought and where I sold, I looked at the structure of BOEM. It's just an illustration that you can make money even in a red market if you know what you're doing and you're prepared to step up and step in, but you must have knowledge to do so. When the markets go red, when they come down, you must be aware that they will come back up at some stage. We're just starting the bull run, and when you consider how markets move, we can get up to 20, 30, 40, 50% retracements. When you're doing that, you're stacking your sats. You're actually accumulating. That's what you want to do. So many of these particular projects have been so incredibly expensive. Now we get the chance to buy them at a beautiful discount. That's the way you should be thinking. There's always something that you can learn from sell-offs, and this is a video from yesterday. You can see Bonk, Peppy, Floki, Whiff, and 1,000 sats. These are basically meme coins. Now, what are these meme coins doing? They have the retail focus. What about Render? That's AI. Of course, Dog Whiff Hat. Whiff is another meme coin. So we've got some meme coins that are losing heavily at the time of this recording. Now, we can also see that the AI, Render AGIX, that's pretty interesting. So we've got memes and we've got AI. Just keep an open mind for this. When the memes start to rally and the AI starts to rally, think that retail is flooding the markets. This is the time to therefore be cautious. When they actually start to retrace, retail gets flushed out, unfortunately. This is not something to be angry about. This is something to learn from. Remember, if you blame, you lose the lesson and you create more problems. You don't want to do that. We're in the bull market, so we're getting a retracement at the current time. That retracement, if people really believed in these particular projects, they would be leaning in heavily. They would be saying, oh, about time. I've wanted to pick up AGIX. I've wanted to pick up Render. I've wanted to pick up Pith. But it's been far too expensive. Oh, I know. Let's get a 15% discount, 16% discount, 18% discount. Oh, it's like one of those fantastic sales. Is this the way people think? No, it is not the way people think. They think exactly the opposite. They would say, if it goes up and goes green, hey, like a traffic light, I'm going to go. But as soon as it goes red, oh, I'm selling everything. I'm selling it. It's gone. And me too. The purpose of this video is to just give you a bit of a helping hand to understand when the price goes green, that's by design. When the price goes red, that is by design as well. Green, red, green, red. This is the way the price moves. When it comes up, that's okay. That's attracting people to the market. And when it comes down, that's a bargain. Everybody wants to buy the bottom. You don't need to buy the bottom. You can just buy the sweet spots. You don't have to pick the bottom. And then you can ride it all the way up, and you don't have to pick the top either. You can take all the pressure off yourself. You just want to pick the sweet spots inside the market. Any professional will tell you they don't seek to time tops and bottoms. It's just impossible to do. But what they do seek to do is to participate with knowledge and ride price waves. You can do this as well. In the majority of videos, I talk about structure. That's where you know the price is probably going to turn around because it's got too much overhead structure. And when it comes down, it will hit strong structural support levels that will cause it to rebound. You really must know where structure is. If you don't know that, you're in a huge world of trouble because the institutions will just play with you. Unfortunately, many people in financial markets actually start incorrectly. They start by chasing money. They don't know what they're doing. They don't know how the markets work. They don't know intercorrelation or interconnection. They don't literally understand percentages, but they want to make life-changing money. Instead, seek to acquire skill. Seek to acquire knowledge. That's what will make you the money. Please let me know in the comments what would help people to acquire skill. And what tips and tricks do you have that could help people through these red times? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.